Mortgage professionals like myself and attorneys hear the same story over and over and over again. I tried to get my mortgage modified, sent the lender all of my financial paperwork, and after many frustrating months was told, you don't qualify, without any explanation at all. It seems that no one qualifies. Why? The simple answer is you're not dealing with your note holder. You are dealing with the mortgage servicer, no matter what they call themselves. Why servicer? Okay, here's how it works. Back when you went to a mortgage broker to purchase your home, he found a lender who would make your loan for the purpose of immediately selling it to what we call a securitizer. The securitizer is a very profitable way to electronically bundle thousands of individual mortgages into what's called a mortgage-backed security. Then the securitizer sells shares called certificates of its mortgage-backed security to hundreds of different investors like banks, hedge funds, retirement funds, just like big investors buy chunks of General Motors stock. Such big profits were made on selling mortgage-backed securities that securitizers push brokers to sell more and more and more mortgages so that they could bundle them into mortgage-backed securities. You and I, however, as the homeowner, never ever learn which investment group actually owns our mortgage because no one owns our individual mortgage. They just own a share of the security, which is a tiny piece of the mortgage-backed security. Usually the securitizer is also the mortgage servicer who collects each mortgage payment from each homeowner. And they take about 0.5% of each payment as their profit and then forward the lump sum every quarter to the groups of investors or certificate holders. Fantastically profitable idea that worked perfectly. As long as homes keep appreciating, mortgages were paid, there was no recession, and the housing market didn't tank. But it did. Mortgage-backed securities then became the toxic assets our government bailed out with our tax dollars. Post-housing crash, securitizers or loan servicers could no longer make money by bundling mortgages. So here's what they did to keep their huge profits flowing. The servicer deducts its actual and anticipated expenses before it distributes the mortgage payments it collects to the certificate holders. Guess what a servicer charges as a really, really big expense? That's right, foreclosure fees. Thousands of dollars in fees the servicer can now collect and not wait for those payments to trickle in. Thus was born the foreclosure industry. The servicer gets to collect foreclosure fees from all the mortgage payments it receives and deduct those fees from the lump sum it has to pay to the certificate holders. Who takes the big hit from the monster losses in each foreclosure? That's right, the investor groups, the certificate holders. The servicer never owns the foreclosed houses and has no duty to pay any of the costs of the upkeep or the reselling of the home. The simple reason you cannot get a mortgage modification is that foreclosing is much more profitable for the servicer than going through all of the time and the trouble to modify a mortgage and wait for an even smaller mortgage payment to trickle in.